Greetings, my beloved clients and friends. So today is March 19th, 2022. I just wanted to give a market update because it was a very interesting week in the market, to say the least. And I'll start with last weekend. Last weekend, I couldn't sleep. And that's rare. I usually sleep just fine, and I manage a lot of money for a lot of people, and it's their important money, and so that responsibility, the weight of that, I feel it on my shoulders. But even with that, I've been doing this a long time, and I sleep just fine. Well, last weekend I couldn't, because our portfolio peaked around November 4th, and it's been 4 months that we've seen this drawdown, and there's a lot of bad news, and I felt that uneasiness, and restlessness, and I came in the office on Monday, and I told him, you know what, I think I have pre-capitulation stomach, meaning it sure feels a lot like a bottom. It sure feels like a lot like a market bottom. The doubts that are going through my head, and the uneasiness, that's what it feels like near a bottom. And this is how you make money in the stock market: buy low and sell high. It sounds very simple, but it's not simple at all, because what buy low means is buy when there's nothing but bad news on TV. Buy when you can't sleep at night. Buy when you've been seeing things go down for 4 months. That's what buy low means in reality. Buy when, every nerve is telling you not to, That's what buy low feels like in reality. And I recognized that feeling over the weekend, and I'm like, that's what buying feels like. And so I said, hey, let's get ready to do some buying, because it feels terrible, and it's scary, but that's what buy low really feels like in reality. Same thing with sell high. I'm not sure which one's harder to do, buy low or sell high, because sell high is this feeling, this euphoric feeling when you've been doing great and everybody loves you, and people want to give you more money, and people want your opinion, and that's when you sell. So it's really easy to say buy low and sell high, but you got to recognize the feeling, and that's sure what it felt like last weekend. So sure enough, Monday morning the market hit new lows. I mean, they hit lows January 24th. It kind of looked like a capitulation, but not really. And then day one of the invasion, February 24th, markets hit new lows. And on Monday of this week, markets broke through those previous lows and hit new lows. And but stuff had been really beat up over those last 4 years. And even the high growth stuff started pulling back around February of last year. So, and the rest of the stuff around November of last year. So there was some companies that needed to get price corrected that really did. They were off 60, 70, 80%. And then there were some companies that, just because they were around those, they got pulled down too. And they were down quite a bit. And they finally got to a place where they looked kind of attractive, actually. Where the prices looked like it might have been overdone, and so sure enough, the market really responded this week. And we're not officially calling a bottom yet, because there's still a lot of bad news out there, but it kind of felt like it. And I think the Dow was up 8, the Nasdaq was almost 10, and our portfolio was up over 10 this week. And where the biggest gains were the most beat up companies. Okay, so those are kind of the signals of of what a bottom looks like, and so we were ready to do some buying. And I want to give a shout out to my clients. That's why I call you beloved, because you're troopers, man. A lot of these clients have been with me 5, 10, 20 years or more, and we've been through this before. COVID was a big pullback. 18 was a big pullback. 2008, 2000 to 2002, and we've navigated through this. And, people ask me, well, how are your clients taking it? I bet you're getting a lot of calls and stuff. And actually, no, for the most part, my clients are holding the line. They're battle-tested veterans, and I really appreciate the fact that they've held the line. And there was this one somewhat aggressive trade that we started doing this week, and so we didn't do it on a discretionary basis. And I called clients and I said, what do you think? 100% of them said, yeah, let's do it. So that's really comforting. And then I have a few clients that do get jittery, and they're kind of like my canaries in the coal mine. And when things get really bad, and when unwittingly, they've been calling bottoms for a while. So I know when I get calls from them, we're probably pretty close as well. And this week we did get a few calls from my dependable and beloved canaries. So so what happened this week? Well, what the market hates is uncertainty. And they could actually handle bad news better than they could handle uncertainty. And so uncertainty was like this. Is Powell going to raise rates? How much is he going to raise rates? When's he going to start? How long is this going to last, right? That's uncertainty. Once he says, hey, we're going to raise rates, and we did it. Okay, now we know he's going to raise rates. And he said we're going to raise rates probably 6 or 7 times. So we're not going to like that per se, but at least now we know. So even though it's bad news, but there's certainty, and the market would rather have certainty than uncertainty. And same thing with the war. Is Putin going to invade Ukraine? How long is this war going to last? Who's going to be involved? And those kind of questions. I mean, it's not been resolved, but there's been some certainty. Yeah, he is going to invade Ukraine. He did. And the war isn't going to end quickly, right? It didn't. And so we're kind of wrapped our head around that, and we've seen how the lines have been drawn and who's on whose side. And so because some of that uncertainty's gone away, I think the market has responded well. And there's this one really talented but extremely aggressive manager named Kathy Wood, and her fund was down like over 60% from their highs, maybe even closer to 70, and she's starting seeing massive inflows into that fund. So there's some bottom fishers out there, and when I say some, it's not just a few. There's a I don't want to say smart money, but there's some money that's looking at this as an opportunity, and it showed up in the markets this week. So another interesting thing that happened this week was that China blinked. And what do I mean by that? Well, we had been kind of concerned about China, and we talked about it in other videos, and they'd taken a really hard stance on their tech, maybe we call them monopolies, like their versions of Amazon and Google and the billionaires that run them, and they've taken a hard stance on them. And then the other thing that was going on in China was that their commercial real estate, they had over leveraged, and there was some risk of default, and the government was kind of inclined to almost say, well, we're just going to let it happen. It's not our job to bail you out when you make bad investing decisions. And they were kind of leaning towards not wanting Western capital for their capital markets. Like, we're gonna shut off our capital markets to Western capital. So, but this week, China blinked. I believe they saw what happened when a country gets shut off from Western capital. Russia being the prime example, and how devastating that was, and how quickly it became devastating, and how they could just shut down the financial systems and the flow of capital into a country, and how they could cripple a country overnight if they decided to flip the switch. And I think China saw that, and they said, know what, we're gonna have to play nice. And they said, we're gonna be more lenient. We will accept Western capital. We are gonna help our big commercial real estate firms through this situation, and we are gonna be more lenient to our tech billionaires. I was like, what? I believe they blinked because they saw what was happening to Russia. So that was a huge positive. So another thing, you may recognize I'm on a different trail, and you should see the amazing view here. Look at the valley back there. But anyway, we're up in Ojai this weekend, and I've seen the power of the U.S. consumer firsthand. My wife was sick because we had planned this little weekend getaway, and she's like, man, I'm sick, I can't go. And we called the hotel, and they're like, well, it's too late to cancel. She said, well, you know what, let's go. She was like, I'm gonna be sick at home, I might as well be sick in that beautiful hotel. So that's an example of that U.S. consumer. Nothing's gonna stop us from spending money. We drove up here on a Friday, and we were in Friday LA traffic, and I was like, look at all these people driving these cars that they're putting $5 and $6 a gallon gas, and that's not stopping them. It's still bumper to bumper traffic. We're gonna win. You know what I mean? That's our superpower. That our ability to spend. When COVID came and they shut down the economy, that didn't stop us. We said, well, if we can't go on vacation, we're gonna spend on our house. And we cleaned out Home Depot, and there was an 8-month waiting list if you wanted to talk to someone about doing your pool or your backyard or your bathroom or something. And we were undaunted, and we just kept spending. And I'm out here, and the restaurants are packed, and that's how we're gonna win the war. And I bet Russia's shaking in their boots because we're not pulling in our horns, and we're still spending, and we're still pumping $5, $6 gas into our cars, and we can outlast them as long as we keep. See, if we got scared and we stayed in our home and stopped spending money, that's when we'd get in trouble. But no, that's not America. We pushed back so much when they said we were going to shut down our economy and we can't go to the theater and stuff like that. We're like, what? You're not going to let me spend money? We fought back. And that U.S. consumer is resilient. And I'm keep your eye on that if you want to see something. If we start getting dovish about how we spend as consumers, then the war might turn not in our favor. But as long as we're out here spending money, that is the U.S. economy superpower. China saw it and they blinked. Russia's feeling the pain of it, and so that's encouraging to me. Inflation is raging out of control, and we're still spending. We're paying more. You know why inflation is raging? Because we're not stopping spending. Try to buy a house right now. People are dying to buy a house. They're lining up. They're overpaying to buy houses. That's the power. That's the superpower of the U.S. economy, and that superpower wins wars too. So it's extremely, extremely encouraging, to be honest, to see it out here. People are going on vacation, and they're spending money, and they're going out to eat, and they're shopping, and they're buying houses, and there's a line at Home Depot and the gas station and wherever. So I just wanted to share that market update with you. Um, just be encouraged that I think we're on the winning side as long as we keep this up. All right, you guys have a good weekend.